The South African Reserve Bank has raised the prime interest rate by 25 basis points to 3.75%, citing inflation as a worry. The decision was announced yesterday by Governor Lesetja Kganyago after a split vote by the bank's Monetary Policy Committee. 3 MPC members wanted an increase, while 2 backed a decision for rates to be kept on hold as the South African economy continues to battle the impact of the COVID-19 pandemic.
The rand is influenced by a number of factors.
As inflation rises, so must interest rates.
Inflation risks have increased and the level of policy accommodation remains high. Against this backdrop, the MPC decided to increase the repurchase rate by 25 basis points.
Economists were not surprised by the announcement, which signals that increasing rates will be the norm for the foreseeable future.
High inflation hits the poor, and to the extent that the SARB wants to control potential de-anchoring of inflation expectations, which have impact in terms of wage settlements in the economy, it is the right decision.
Governor Lesetja Kganyago was, as always, candid about the slow pace of economic reform that is holding back the country's economy, in spite of a projected rebound of 5.2% in 2021, post the arrival of the coronavirus pandemic.
GDP is expected to grow by 1.7% in 2022 and by 1.8% in 2023, unchanged from the September forecast. GDP growth in 2024 is forecast to be 2%. The July unrest, the pandemic, and ongoing energy supply constraints are likely to have lasting effects on investor confidence and job creation.
He should run the entire economy. You know, he keeps pointing to the things we need to do. The problem is the real policymakers in economics in South Africa, the leading lights in our cabinet, they cannot understand that we need a freer economy with less restrictions, with a more modest role for the state instead of this fixation with state-owned enterprises, this fixation with tight labor markets, this fixation with competition policy. They need to liberate the economy.
Consumers and business owners alike are bound to feel the pain of this rate increase as they try and recover from a disastrous 2020.
And that just causes further constraints on us, able to kind of keep your business going, but, you still need to have a bit of cash flow in that. So, it kind of constricts all of those things and just kind of makes it that much harder to actually operate in the space.
This interest rate decision may be a tough pill to swallow for many, but South Africa's overall economic strife will only improve once government gets serious about the structural reforms that will help soak up rampant unemployment and improve sluggish economic growth. For Newzroom Afrika, Channel 405, I'm Nickolause Bauer in Johannesburg.